FOS Trading, FOS Swing and Day Trading. Update for Friday, we're 7 minutes prior to market closing for the stock market, for the market in general. The futures market, of course, will stay open until 4:15, and then again from 4:30 till 5 p.m. Then we'll be closed for the market will be closed for the weekend, and open again on Sunday at 6 p.m. Eastern Standard Time. Back to the doldrums. So we end the week on a down note. The entire week was a down note as far as I'm concerned. Most of the indices were down every day of the week. The Dow may have been up one of those days, but for the most part, it was overall very negative week for, at least for my portfolio. So shortly after my last video, I had said I was going to hold on to all my contracts. That thought quickly changed. We went up a little bit higher, and I thought about it, and I said, wow, we've got several things going on right now. First of all, 2020 was a phenomenal year, and perhaps a big part of that was the the free money, the money that's being printed, the trillions of dollars that's going into the economy, into the market, and there's so much interest in the market right now with so many folks at home. People getting, who knows what people are doing with the stimulus pay, but I guess some people are putting it in the market. So my thought is that a lot of that was the reason for 2020 run up in the market, and you can only run up so much, even though we're talking about trillions of dollars. At some point, all that's going to be baked into the market, and then the market's going to just start trading on fundamentals or based on other newsworthy events and other economical decisions by the higher offices. And we know that under Biden administration, there's a push to for taxes to go up or to be put back in place, or back where they were, or not quite where they were, maybe up more higher than where they are now, but maybe not quite back to where they were before the cuts of the last administration. So we know that there will be higher taxes for corporations, and maybe that's starting to seep into the market and causing the market to go back into the doldrums. Also, the minimum wage, and I'm not saying one way or the other that these are good things or bad things. I'm just saying what might be impacting the stock market. Minimum wage. I mean, certainly, if I were making minimum wage, I'd be ecstatic by hearing that minimum wage is going up to $15 an hour. As long as I know that I'm going to keep my job, $15 an hour up from $8 an hour. That's almost double my pay there. That's quite an increase in pay. So, however, the impact that might have on small businesses could be, quite challenging, and I think that's why we've seen so much volatility in the RTY. RTY. Well, let's see. I had two contracts. I sold one contract in the RTY, just with that thought in mind that small businesses might might struggle, continue to struggle for a while here. It's kind of unpredictable how they're going to do with the raise with the higher tax rates and the higher with the higher minimum wage proposal. So let me go to the 15-minute. This is the 1-minute chart. Let me go to the 15-minute. And as you can see, I sold here, and we actually, wow, I didn't realize we trended that much higher. Well, so maybe that sell wasn't the wisest decision, but I still have one contract, so I gained from that. And I'm down $95. So I took a loss on this sell, but I just wanted to reduce my my position in RTY. I stayed with the 2 contracts in the Dow, and the Dow was up in the morning and has done nothing but trend down since then. And now that's in the negative, so I'm actually down $20, $21, 2 contracts in the Dow. Dow's overall been holding up fairly well. It's kind of really respecting that 200-day moving average. And then you can see the 50-day moving. I'm sorry, this is the 20-day moving average. It's now crossing the 50-day right near the close here. And the 50-day has been respected a lot as well. It crossed over the 200-day here, but we went down. Kind of see this move upward resulted in the 50-day crossing over the 200-day. And that's a bullish sign, but these are lagging indicators, so what happened next? We went down, so everything's going to start turning the other way. And then if the 50 crosses the 200 later on down here, that's going to be a bearish sign. But by then, we may have already seen the bear, and it might be on its way back up. So those indicators, lagging indicator. I do have a VWAP indicator. It's a little dotted line. Kind of hard to see. You can see that little dot there. That's the VWAP reset. You can see it up here. Let's see. Find my arrow. Yeah, that's the VWAP. VWAP stands for volume weighted average price. So that's a very popular indicator, and many traders will trade off of that indicator, even alone, that indicator alone. But I like using I use the VWAP, but I also use the 20-day moving average, 50-day moving average, and the 200-day moving average. And I use those because they are very commonly used indicators. And if you're going to use an indicator, you want to use a commonly used indicator because that's what most people are going to trade on. That's the majority of traders are going to follow. Now I hear different traders use different short-term indicators. They may, use a 5-day instead of a 20-day or 10-day or somewhere in between. But I just use 20 because I hear 20 used a lot, 50. And if the closer you get, if you get to a 5-day indicator, you're essentially just going to follow what that stock is doing, or that what that futures contract is trading at. It'll just follow like just a line following exactly what it does. The shorter you make that indicator, the further out, the more there's going to be a lag, and the 200 just seems to be a very well respected indicator, and the 50 gets a lot of respect as well. You can see where we frequently these candles will move up to the 50 and just stall, or will go up there and bounce off. And so that if you're a scalp trader, you can use those lines to make your entries and exits. I do have the ability to bring up many more tools on this platform. I like keeping things simple. So, I have my volume indicator down here. And then I have these. I was using Bollinger Bands before, but, I don't really need them. Okay, so that's gold did well today. I'm not in it. Oil was down for the day. Maybe that'll be good for gas prices overall. But, right now we're paying at the pump. Around here, regular is going for about $2.30 some cents a gallon. And RBOB, if you follow RBOB, which is the gas futures, RBOB, that's been on a tear. So we're still in the doldrums, but as you can see, I sold a contract up here, and we're down here. So that was good for the NASDAQ. Good decision there. And then with the S&P 500, I sold a contract up there, and we're down here. So that was a good decision. So two good decisions, one not so good. But since we've got another week of February to go, I'd rather be at my core holding level. I'm a little bit above my core holding level, what I consider my core holding level. A little bit above that. And so hopefully the market will turn around next week and I'll benefit from that. But I'm not so much above it that if the market just continues to tank, that it's going to just rip me to shreds. So yeah, I had gotten back to 43 range. I was up to 43,200 on my equity. Now I'm down to 41,300, which, it's $2,000 loss. But again, I was down to 37.5 just yesterday. So I'm happy to be in the above 40s. And hopefully this market will turn around. Now, if we just have a prolonged bear market, I'm going to have to rethink my strategy. But I'm thinking the bulls haven't given up quite yet. That they'll stick around for a while and keep up the fight. I don't like drastically switching back and forth from bull to bear, but I will go into some bear trades periodically. I did have that protective put on my other account, on my options and stock trading account, and I actually closed that bear put out yesterday. It was a bear put spread. I closed it out yesterday while we were down near the lows. So I kind of maxed out my profit on that. And that kind of helped offset some of these losses in my futures account. But that account also has some long positions, small amount of Tesla, small amount of NEO, and a small amount of Airbnb. So, that's all I have in that account right now. They're small positions, so they're not going to hurt or help me one way or the other too much, unless you get some dramatic moves in those stocks. So anyway, that's it for Friday. This will be my work week coming up, so I won't be posting as much. but I will be following these markets. I'll make some adjustments in my account periodically. I may only post a few videos over the week, if any at all. So, good luck to everyone, and safe trading.